AMC stock currently has over $1.4 billion worth of short positions on its underlying stock that we can go ahead and pull up on Ortex, which we will do here in this video. But we have a lot of market maker shorts that are not accounted for on Ortex that we have to go out and try to calculate for ourselves. So heading into this week, a week where JP Morgan expects the stock market to rally 7%, I think it's very appropriate that we go ahead, take a look at the option chain, take a look at how many shares could potentially be bought by the market makers, not including portfolio rebalancing and the hedge funds that actually have accounted short positions, potentially starting to cover on those positions due to the risk reward profile of AMC stock. That makes a lot more sense here to go long on the stock than to go short on the stock. But before we get into it, and yes, we are going to dive into all of this key information, make sure you guys have your hustle, motivation, belief, discipline, focus, flexibility, failure, risk, persistence, and patience, because all of those things will likely be tested this week and over the next couple of weeks. So we're going to get into all of this information. If you guys find value out of the video, hit the like button, subscribe to the channel if you guys want to come trade with me live in real time, start off the second half of the year on a good note. Link down below in the description of this video or in the pinned comment. So first things first, let's talk about it since it is the title of this video. What do we have as far as dollar amount that is short for AMC stock? Well, it's sitting at about $1.4 billion. We know the Ortex estimates are kind of all over the place, so that's going off of the estimate that we currently have, which I would imagine the real short interest is much higher. Even the reported short interest we had 7 days ago was 22.84%, and you've seen a lot of, call it, hedge fund managers, some people taunting the AMC community, like this guy over here with AQR Capital Management, Cliff Esnes, kind of tried to call us out. So I think the short interest is higher than 22.5%, but if you include the market maker shorts, it's way higher. We're not even in the same ballpark. We're not even in the 20% range. You're in the 30, if not the 40% range, and we'll talk about that in just 1 second. But there is $1.4 billion short of AMC stock, and ultimately that money is going to make its way, I should say, into our portfolios. And I think that's the most exciting part about this $1.4 billion that is short. Nonetheless, like I said, 22.51% short interest of free float. Free float out on loan is 37.15%. So really what that is telling you is there's a lot of shares that are out there that have been lent out that have not been sold short yet. So if those start to get returned due to this portfolio rebalancing, that could be a good thing, but it might drop the share utilization. It's really a big question for me why so much free float is out on loan compared to the estimated 22.5% short interest. I like to think the short interest is much higher because that's about 15% of the float that is out on loan that has not been sold short yet. That is a pretty big ratio nonetheless. Now it does say the cost days to cover is 3.73, 100% share utilization. Still, cost of our max 49.41%. That is a clear indication of potentially seeing a bullish rally here in the next couple of weeks. Because why? If you thought the stock, as an owner of the stock willing to lend it out to short sellers, if you thought the stock could make a big move, well, you're gonna want a higher cost to borrow, and we could see that right here, that the cost to borrow even on Friday was in the beginning of the day at about 34%. Thursday was at about 24%. So you have effectively doubled the cost to borrow since Thursday. It was at 22% to be more specific, about halfway through the trading day. So there's a reason for that, right? And I think that's pretty important to acknowledge. There is still a lack of availability for shares, and that is why the share utilization is still so high. At some points there are 0 shares available, 7,000, 6,300, 0, 6,000, 0, but you're not seeing massive amounts of shares that are able to be lent out. So there is the data. That's the Ortex short interest you guys need to know. Now, if you're looking at the option activity, for Friday you had 4 orders totaling $2.63 million, positive order value of 2%. And you're seeing a lot of the overall dollar amount of these puts or calls is, you know, in large orders, right? Like this July 15th $20 put, this was a $2.51 million order. That was a very, very large trade. And what that does is it forces market makers to go out and short stock, massive amounts of stock. If you think about it, look, 3,000 contracts right here, $836 a piece. That comes out to 2.51 million. Well, 3,000, let's go ahead and pull up the calculator because I'm not that good. 3,000 times 100, because each contract is worth 100 shares, and that's 300,000 shares in one order that the market makers would essentially have to go out and short on the open markets. So that's why if we go ahead and look at the option chain and look at specific strikes and the open interest, that can give us more of a gauge on essentially how many shares the market makers would have to buy back on the open market to get rid of those hedged positions, right? Those hedged puts. Now, July 1st, that's going to be this upcoming Friday, and you could see, I mean, we have a couple thousand here or there. The lowest is about 1,000 for open interest at the 1550 strike, and then you do have about 5,200 for open interest at the $13 strike, and the $13 strike is going to be the most important. So you can look at July 1st, $13 strike, about 4,200. Now, if you look at the July strike for next week, July 8th, that's about 1,200. So we're at, what, 5,400? And then July 15th, that's going to be the big expiration. And then at the $13 strike, you have 18,000. So let's do 5,400 times, or plus, 18,000. Too many zeros. Goes 23,400 for open interest just at the $13 strike. Now, if we go ahead and times that by 100, that's about 2.3 million shares the market makers will have to go out and buy if AMC stock can go up another 50 cents, not including the 1250 strikes that are still out of the money. That had about 400 for open interest, has about 1,200 on the July 8th expiration, and the July 1st expiration has about 2,700. So you could probably add another couple 100,000 shares that the market makers would have to buy at the 1250 strike. And if you're looking at, let's just call it 2.5 million shares the market makers would have to go out and buy to hedge out these options essentially over the next 3 weeks. If AMC goes above 13, that's a considerable amount of volume that we even see on a normal day. If we take a look at, you know, what was this, June 22nd, you had 26 million shares trading hands. The next day, 36 million. The day before that, 30 million, 33 million, 26 million, 37 million, 25 million. You guys get the idea. The volume has been very low. So if you see 10% of the buying power on any given day that has to essentially happen because of the market makers, then that's going to be very, very bullish. That is going to be the difference between a 3% positive day and a 10% positive day, right? So hopefully you guys understand how important that is. And if we do just take a quick look back at the option chain, I do want to explain this a little bit more in depth, why I added up the next 3 expirations out to that July 15th expiration that has all of that open interest, about 430,000 calls that are out of the money and 11,500 calls that are currently in the money, is because the premiums are so cheap all the way out until July 15th. So if we go ahead and take a look at the $13 strike out for, I'm not sure why it won't let me scroll down right now, but if we go out and look at some of those strikes, the $13 strike out here for July 15th, it's only trading at $1.07 right now. So a technical break even would be $14.07 per share. So in between 13 and call it 14.50 is where a lot of these actual, you know, contracts would have to be de-hedged for. by the market makers. That's where a lot of that buying pressure would come in. But even down the chain, I mean, the $15 strike is $64, and there's 17,000 for open interest there. At the $14 strike, there's over 11,000 for open interest, and the break evens are very low, right? For the $14 strike, your break even is $14.84. For the $15 strike, your break even is $15.64. So all of that open interest is going to have to be hedged for very, very quickly, and that's where you can see a multi-week gamma squeeze. It doesn't have to be on the day of expiration. You could see a gamma squeeze anytime from here until July 15th because of how cheap the premiums are. So I think that's very important to acknowledge nonetheless. Now let's go ahead and take a look at the max pain for this week for AMC stock. And obviously, as you guys know, max pain is not a direct science, but it can be an indication of, you know, where the market makers would make the most amount of money. So that is why we do like to look at it. Now, the max pain is $12 per share by the end of this week. Like I said, JP Morgan's Marko Kolanovic expects a 7% rally next week because we have seen a lot of pain in Q2, and we don't have a lot of new data or news that we are expecting to get. We do have Fed Jerome Powell that speaks on Tuesday of this upcoming week, and then we do have Nike earnings on Monday. You do have durable goods orders on Monday as well before market opens, so depending on what happens with that, that could give us a boost to the upside or potentially a boost to the downside. And then you guys know the main market drivers of Friday, which was the bank stress test as well as the Michigan Consumer Sentiment Survey that came out and showed inflation expectations had ticked down quite sharply, but it also showed consumers were more fearful now since 2008 when the unemployment was really high, everyone was losing jobs. People are all more fearful now than that, which is absolutely wild just to think about that. Now, that's basically it though. You do have ISM manufacturing PMIs that do come out on Friday, but other than that, you're pretty good. PCE comes out on Thursday as well. It moves the markets, but it's not like core CPI. It's not like CPI. So that's basically it. And that's why JP Morgan expects a 7% rally. If we get a 7% rally in the markets, well, AMC stock's going to do very well in my personal opinion. And don't forget about the executive orders and everything that has come out over the past, you know, couple of months or even over the last year. All of that will work to our benefit in due time. I don't think all of that was pointless and worthless. So that is pretty much going to be all for this video. You do have, you know, 10 to 20% of the volume, if not more, even up to the $15 strike that would have to be hedged out by the market makers if we can get up to that $15 level. Like if you go out and actually include in that calculation that I did, which we'll wrap off the video with that. So let's do 18,000 for open interest at the $13 strike, 11,300 for open interest at the $14 strike, and the $15 strike about 17,145 equals 46,000. Oh, wrong button. And then let's do it for July 8th. You do have about 2,400, 800 plus 5,500. And this is just up to the $15 strike, just so you guys know. 2, 6, 7, 8, 6. So you're looking at about 13,000 additional for this week. Times 100. That's almost 7 million shares the market makers would have to buy if the price of the stock just goes to $15. That is going to be 20-30% of a normal day's worth of volume over the past couple of weeks, and that is what could give us a bigger move than not to the upside. So hopefully you guys are excited. Hopefully you guys are locked in, ready to go. You got your emotions in check. You got your persistence, your patience, your risk, your failure, your flexibility, focus, discipline, belief, motivation, and number one, hustle, ready to go for this week. If you guys want access to all of my trades in real time, link down below in the pinned comment, as well as make sure to get yourself those free stocks with Webull, Moomoo, and Public. It is absolutely free money. You guys might as well go ahead and take advantage of that. You guys enjoy the rest of your day. I'm going to put on my Budweiser hat and try to do the same. I will see you in the next one.